Hey everyone, and welcome back to Talk Tickers. We're going to be taking a deep dive into Hasbro's Q4 2024 earnings call.
Yeah, this should be a good one.
Yeah. So let's just jump right into it.
Sounds good.
Revenue came in at $1.1 billion for Q4, down 3% year over year.
Not great.
Not great, but Hasbro achieved a record operating profit margin
Ooh, that's good.
of over 20%.
Wow. Okay, so that's pretty significant, especially considering their consumer products segment returned to profitability this quarter.
Exactly. And speaking of high growth, we got to talk about the Wizards of the Coast and digital games segment.
My favorite.
They saw a 4% year over year increase and are now boasting a 40% operating margin.
Yeah.
So what's driving this success?
I mean, we all know Magic. The Gathering is a powerhouse.
Right.
And it nearly matched 2023's record performance, even with fewer set releases this year.
That's amazing.
They've also found some clever ways to keep their dedicated fan base engaged.
Like what?
Like with their secret Lair releases.
Now, for our listeners who maybe aren't familiar with Magic, what is a secret lair?
So these are limited edition releases of Magic cards with unique artwork and themes. You can kind of think of them as collector's items for the most dedicated fans.
Okay, so they're really catering to the hardcore fans.
Exactly. And they're sold directly by Hasbro and only available for a very short time.
I can see why that would drive demand.
It creates that FOMO, that fear of missing out.
Right, right.
And it's working.
And we also got to mention Magic's upcoming Universes Beyond sets.
Oh, yes.
The Final Fantasy collaboration has generated a ton of buzz.
I think that's huge.
Me too.
Mm-hmm.
I think it could be massive for Magic and Hasbro overall. What do you think of this strategy of incorporating other popular IPs?
I mean, it's a really clever way to attract new players and expand the reach of the Magic brand.
Right, like bringing in Final Fantasy fans who might have never even thought about playing Magic before.
Exactly.
It's really smart.
It is.
And on the digital front, we can't overlook Monopoly Go.
Oh, yeah. Can't talk about that.
Maintaining high engagement. They even rolled out a celebrity-studded TV campaign and a new Tycoon Club feature to keep that momentum going.
It's easy to dismiss mobile games, but this one's consistently generating around $10 million in revenue every month.
Wow. Okay, so they're making serious money from it.
Big time.
Wow.
Yeah.
All right, so moving on. Let's talk about Dungeons & Dragons.
Okay.
Their first significant update to the 5th edition rule set since 2014 was a huge hit.
Yeah, it's a big deal.
Both the Player's Handbook and the Dungeon Master's Guide achieved record sales.
It's really great to see that Hasbro is listening to their fan base and is willing to make changes to keep things fresh and exciting.
Yeah, it shows they're not just resting on their laurels.
Definitely.
And speaking of success, let's talk about Baldur's Gate 3.
Another big one.
They've more than doubled their initial sales projections. What do you think contributed to this game's success?
Well, for starters, the game is incredible.
Right.
But it also benefited from a really smart release strategy by developer Lorien Studios. They really focused on game quality over upfront marketing and hype.
So it's like they let the game speak for itself.
Exactly, and it clearly paid off.
That's a great lesson for any company: quality over hype.
For sure.
Now, Hasbro isn't just about video games. They've also seen remarkable growth in their licensing business.
Absolutely, up 60% in the last 3 years.
60%.
For
Wow.
sure.
So that highlights Hasbro's incredible strength in leveraging their IP across so many platforms.
It really does. They're the third largest entertainment licensor globally and the largest in the world of digital games.
It seems like everyone wants a piece of a story. The Hasbro Pi partners are expected to invest over $4 billion in Hasbro brands over the next 3 years.
That's wild.
That's a serious vote of confidence.
It is.
And what I find really interesting is some of the new partnerships they announced.
Oh, yeah.
The collaboration with Mattel, combining Play-Doh with Barbie.
That's unexpected.
Very unexpected. What do you think of this move?
Well, I think it's a really prime example of Hasbro thinking outside the box and finding those new avenues for growth.
Right.
And it has the potential to tap into entirely new audiences.
Totally. Like parents who might buy Barbie products but haven't even considered Play-Doh before.
Exactly, or vice versa.
Exactly. And another partnership that caught my eye was the one with Saber Interactive, the studio behind the mega hit Warhammer 40,000. Space Marine 2.
Oh, yeah.
What do you think about this?
I mean, this signals that Hasbro is serious about becoming a major player in the AAA video game space.
Yeah, it seems like they're not messing around.
They're going all in.
So we've talked about their financial performance, their star segments, and their exciting new partnerships. But what really ties all of this together is Hasbro's playing to win strategy.
It's a major shift in focus from cost-cutting to growth.
So let's break down this playing to win strategy and how it's shaping Hasbro's future.
Okay, sounds good.
Welcome back to Talk Tickers. We're picking up right where we left off with Hasbro's Q4 2024 earnings call. They've got some really ambitious growth plans.
Yeah, and before the break, we were just starting to talk about their projections for 2025 and beyond. So let's dig into that a little bit more.
All right, so Hasbro is projecting modest revenue growth in 2025 with continued margin expansion. And they're anticipating a mid-single-digit revenue, TAGR, through 2027. Can you remind our listeners what KGR means?
Well, sure. So KGR stands for Compound Annual Growth Rate. It's essentially just a way to measure the average annual growth rate of an investment over a specific period, assuming that profits are reinvested each year.
Thanks for that clarification. So they're projecting steady, sustainable growth over the next few years. This growth is fueled by the continued momentum of Magic, a strong entertainment slate, and the launch of their self-published video games.
Exactly.
So let's break down each segment a little further, starting with overall revenue was down slightly, but how did each segment perform?
Well, like we were talking about earlier, the Wizards of the Coast and Digital Games segment was the real star performer,
Okay.
with a 4% year-over-year increase.
Wow, that's pretty impressive, especially in down market.
Yeah, and that was largely driven by the continued success of both Magic, The Gathering, and Monopoly Go.
So Magic seems to be a consistent powerhouse for Hasbro.
Pretty much always has been.
And it sounds like Monopoly Go has really found its stride in that mobile gaming market. I have to admit, I was a little skeptical of that one at first, but the numbers don't lie.
Yeah, it's a great example of how a classic brand can be successfully adapted for the digital age.
Totally. Now, what about the other segments?
So the consumer products segment, which includes like their traditional toys and games, saw a 1% decline in revenue.
Okay, so not a huge drop, but still a decline.
Yeah, and that was mainly attributed to their decision to exit certain brands and a reduction in closeout volume.
So they're streamlining their portfolio.
Yeah, exactly. They're focusing on the brands with the most potential for growth.
Makes sense. And what about their entertainment segment? I imagine the sale of E1 had a pretty significant impact on that.
Yeah, it definitely did. The entertainment segment saw a substantial decline in revenue, primarily because of that sale.
It seems like they're really shifting their focus away from film and TV production and doubling down on their core strengths.
Yeah, that's right. Toys, games, digital entertainment.
Right, but even excluding the impact of the E1 sale, didn't their entertainment segment still experience a decline?
Yeah, it did. Even without the E1 sale, the segment still experienced a 4% decline in revenue.
Okay, so they clearly have some work to do in that area.
For sure, but there is some good news.
Okay, tell me more.
Their overall operating profit soared by 76% compared to the previous year.
Wow, 76%. That's a huge jump. What contributed to that increase?
Well, it was largely attributed to a few key factors: a more favorable business mix, significant cost savings, and the absence of certain non-recurring inventory costs that impacted the previous year.
So it sounds like they're making some smart financial decisions.
Oh, definitely.
Now let's dive a little deeper into those cost savings. They've set a target of $1 billion in annual gross savings by 2027. It's a pretty bold goal. Do you think they can actually achieve it?
Well, it's definitely ambitious, but they're already well on their way. They've achieved significant cost savings through various initiatives like supply chain optimization, design-to-value improvements, and a more streamlined organizational structure.
So it's not just about slashing budgets across the board.
No, it's about making strategic changes to improve efficiency and profitability.
Right, and it sounds like they're reinvesting some of those savings back into the business.
Exactly. They're focusing on those high-growth areas like digital gaming and strategic partnerships.
Smart move. Now, what about their capital allocation priorities? What are they focusing on?
So their priorities are pretty clear: investing in the business, paying down debt, and returning cash to shareholders through dividends.
Dividends are always a good thing for investors.
Investors love them.
Speaking of investors, what kind of guidance did they provide for the future? We touched on this a bit before the break, but I'd love to hear a little more.
Sure. So they're sticking with their previous projections of modest revenue growth in 2025 with continued margin expansion. And they're still expecting that mid-single-digit revenue CAGR through 2027.
And this growth is expected to be driven by those key factors we mentioned earlier.
Yep. Magic, their entertainment slate, the launch of their self-published video games.
So overall, it sounds like a pretty optimistic outlook.
Yeah, it does.
But let's be realistic. There are always potential challenges to achieving these goals. What are some of the hurdles Hasbro might face in the coming years?
Well, the toy industry as a whole is facing some headwinds.
Like what?
Like changing consumer preferences, rising input costs, a volatile global economic landscape.
Right. Those are all external factors that Hasbro can't really control.
Exactly.
What about internal challenges? Are there any areas where they need to be particularly careful?
Definitely. I mean, they need to execute their digital strategy really effectively. The gaming industry is incredibly competitive.
So true.
They'll need to deliver high-quality, engaging experiences if they want to stand out.
Especially with that ambitious goal of self-publishing AAA games.
Yeah, that's a big one.
What else do they need to watch out for?
I think they need to continue to find ways to leverage their iconic brands across different platforms and mediums.
So it's not just about creating great products, it's about creating a cohesive brand experience.
Exactly. And they'll need to be really savvy about emerging technologies.
Like what?
Like artificial intelligence, the metaverse.
Those are huge areas with enormous potential.
And a lot of unknowns.
A lot of unknowns. All right, so Hasbro has its work cut out for it.
Yeah.
But they also seem to be on the right track.
I think so.
They've got a strong foundation, a clear strategy, a proven track record of success.
For sure.
So I think it's time to take a quick break, and when we come back, I want to circle back to something we talked about earlier. Hasbro's evolution from a traditional toy company to a multifaceted entertainment powerhouse will explore that transformation and what it means for the future of Hasbro. So stay with us. All right, welcome back to Talk Tickers. We've spent a lot of time talking about Hasbro's Q4 2024 earnings call, record profits, ambitious strategies. But what really fascinates me is their evolution from a classic toy company into like this full-blown entertainment powerhouse.
It's amazing, isn't it?
It really is. They're not just about action figures and board games anymore. They've got digital gaming licensing partnerships, and they're even exploring that metaverse thing.
I know, it's crazy.
It's wild.
Yeah.
And a big part of that is their focus on aging up. They're recognizing that their brands resonate with people of all ages, not just kids.
Yeah.
So what do you think is driving this shift?
Well, I think they're realizing the power of nostalgia. You know, the kids who grew up with Transformers, My Little Pony, or G.I. Joe, they're adults now, and they've got money.
Oh, yeah.
And they still love those brands. So Hasbro's creating these products and experiences that really appeal to that demographic.
It's smart. They're not just selling toys anymore. They're selling memories.
Right.
And experiences. Think about like those high-end Star Wars collectibles or those retro-inspired Transformers figures. It's all about capturing that feeling.
I totally agree.
And it's not just about the physical products. They're also creating digital experiences that appeal to older audiences too.
Right.
Look at the success of Baldur's Gate 3. It appeals to those veteran D&D players, but also newcomers.
Yeah, it's true.
So it's like they're bridging that gap between generations.
That's a great point.
And they're not just relying on their own in-house talent, they're partnering up with other companies
Oh, yeah. Lots of partnerships.
to extend their reach way beyond just the toy aisle.
For sure.
Remember that collaboration with Mattel combining Play-Doh with Barbie?
Yeah, that was out of left field.
I know, it was a sort of
Yeah.
surprise, but it makes sense.
It does.
It's a brilliant way to tap into a whole new market
Right.
and introduce their brands to more people.
Exactly.
And then there's their venture into self-publishing those AAA video games.
Yeah.
What are your thoughts on that?
I think it's a bold move, but it shows how serious they are about becoming a major player in digital entertainment.
And the success of Baldur's Gate 3 probably gave them a lot of confidence.
Oh, for sure.
It's like, okay, we can do this.
Yeah, they've got their first self-published title, Exodus, coming out in 2026.
I'm excited to see that.
Me too.
It's a really exciting time to be a Hasbro fan.
It is.
So what's the bottom line here for investors and fans? What should they take away from this earnings call?
Well, I think it's clear that Hasbro is in a really good position.
I think so too.
They're financially stable, they have a clear vision for the future, and they're doing a great job of executing their strategy.
They're playing to win.
They are.
And with that focus on innovation, their partnerships, and expanding their reach to those new audiences, they seem really well positioned for continued growth and success.
Absolutely, I agree.
Well, that wraps up our deep dive into Hasbro's Q4 2024 earnings call. Thanks for joining us on Talk Tickers.
Thanks for having me.
We'll be back next week with another deep dive into the latest business trends.
Until then, keep an eye on those tickers.